Hello, Mavericks. This is Rob Reinhold. I cannot believe that September is almost over. Let's jump into what happened today. Now, we had a lot of big news overnight. We had several large companies come out with earnings. Nike came out with earnings. They beat earnings, but they reduced their gross margins, so the stock fell. We had Micron Technologies, a very large semiconductor maker, come out with earnings, but they said they're cutting their capital spending in half to deal with some oversupply in the industry. We also heard from CarMax, Soul's used cars. You can see their stock tumbled today. So it came in to the day just not in a good mood. And then we had a couple other things. We had Bank of America. They downgraded Apple. This is a very big downgrade. And they basically said Apple is no longer a safe haven. So we had a lot of pressure on the market. And remember, we had a big rally yesterday. So if we take a look at the rally we had yesterday, look at this green candle. We had a nice green candle. It had just reached this level of support. Everything looked like we were going to get a decent bounce. And then the wind was taken out from the market. The Dow lost 1.5%. The S&P lost over 2%. The NASDAQ lost almost 3%. Now remember, we closed a little bit off our bottom. So this was even worse at one point during the day. And take a look at the advanced decline line. 80% of stocks going down, and we now have 87% of all stocks trading under their 50-day moving average. This is a very, very bearish market. Now, what I wanted to show you and talk to you about today is that we have had this low here. We had this low, we're right at support, and we've tried to put in some bounces. And the bounces have been pretty lousy. And I want to jump over here to the VIX. We've talked about the VIX is a great indicator for when you've reached a capitulation bottom. A capitulation bottom is where everyone tosses in, says, I'm done, I'm out. And this is typically where good bounces happen. I want to go back to the few times in the past where we've seen VIXs over 32. So here's one, let's call this May 2nd, May 3rd. Here's another one we topped out, let's call that May 10th. Here's another one where we topped out, let's call that May 15th. And then we had another one here, let's call that June 10th. Now what I want to do is I want to show you we usually get some really sharp rallies off of these points. So let's just go back to the S&P. And you can see, let's go to May 1st. Look at this. We got this nice, we came down. We had 3 days of a big rally. And if you go from the bottom, which is 405, to the top, 430, that's a 25-point move in the SPY. That's like 6%. And then we came down here. We got our next bottom right around May 10th. You can see we bottomed out at about 385. We rallied all the way up to almost 410. That's another 4 to 5% rally. We have our next vol. We came here May 15th. We get this really big rally here from the low of 380 all the way up to almost 420. We're talking about almost a 9% rally here. We got our last VIX signal above 32. And you can see we got this nice rally from 360 up to 390. Again, a 7 or 8% rally. Here's the problem. We did not get this V-shaped bottom. Look at this ugly, ugly price action we're getting here. The VIX is saying people are freaking out. Here's the problem. There's not a bounce. This is now more of a low base than a bounce. This is actually a really bad, ugly signal for the markets. The fact that we've reached this typical point where the VIX pops up, we get a capitulation bottom, we have a short-term bounce. We're not even getting that. That's a real warning sign that this market does want to go lower. We are likely going to see a VIX that probably breaks out above this 34 area and makes a new yearly high. Here's the heat map. You can see it was ugly. The only places to hide was energy was actually mixed today. Outside of that, there was really nowhere to hide. Large cap tech is where the pain was. Semiconductors, we talked about the pressure that Micron put on the semiconductors. They were down big. This is just an ugly, ugly period of time. So if we take a look at this market, and we are absolutely brutally honest with where we are. Now look, we've been at a -3 for the last week. We've been at -2 for the last, all through September. Last week we went to -3, which is the most bearish you could possibly be in the market. We're trading below the 20-day moving average, below the 50, and the 20 and 50 moving averages are now sloped and moving lower. However, we had gotten to this capitulation point. We had reached the June low. We had had the VIX trading above 30. And in the past, we've always had a decent bounce. So we were calling for a decent bounce this week off of the lows. Here's the problem. It didn't happen. So we're going to have to take this from a +2 down to a 0. The market is still down 1.4% for the week. Look, we might have an up day tomorrow, but until this market can really show that it's got a couple days worth of a bounce in it, I think we're going to low base and then just fall to new lows. So as you can tell, I am very bearish here in the markets, the most bearish I could possibly be. We're looking at the end of this week, Friday. Okay, Friday, who knows what's going to happen on Friday, but this is a low base, not a bounce. We're low basing, which tells us we're most likely headed lower. So we're bearish. Our outlook is bearish. We've been bearish all through September. We talked about the seasonality patterns. September through October 15th are the worst 6 weeks of the year. We gave a caution to all of our traders in August, saying, hey, we're coming into this seasonally weak period. Let's be very cautious. Let's get bearish. It's been a great September so far. Our traders have done great. Great job, everyone. We probably have about 2 more weeks of bearishness. Now, look, we might have more than that, but when we're just talking about the seasonality patterns, we at least have 2 more weeks in this weak seasonality pattern. Let's take a look at some potential trades for tomorrow. This first one I pulled out of our live session with our traders that we hold every Wednesday together as a firm, and this was a long setup. Now look, I am not really excited about anything long here. I think long trades are going to really struggle. Even the best long trades are going to be struggles. But we always have to be looking at both sides, as we are basket traders here at Maverick. So we're always having some longs, we're always having some shorts, and we're always having some sideways stuff. This is SNOW, Snowflake Holdings. And one of our traders said, hey, you know what? We're coming down to this major trend line. We're getting some nice price action off of it. And I totally agree. Today's price action was actually pretty decent compared to what the rest of the market did. We have a doji here. I cannot get excited about it. Look, I'm not saying that this is a great trade to the long side, but what I can say is this is holding up much better than the rest of the market. We are significantly off of our June lows. The markets are back to their June lows. If the market keeps going down, this is going to get hit. But if this can hold, I'm not ready to jump into this one tomorrow. I'll look at this one next week. But if the market's going to hold here and we get a little bit of a bounce, I think this one's a great trade. I'm not looking for much off of my longs. Any of my bullish trades, I'm saying I'm going to be very, very conservative, maybe 180 at the most on a target, SNOW. Jumping over to a sideways trade, we have BTU. This is also from one of our traders in our Wednesday session. This is a sideways trade. I really like this. I think this is a really solid trade here. It's in a sector that is performing better than the rest. This is in the energy sector. This is Peabody Energy, and they do natural gas. And you can see here that we've got some really good support in this area. And the call was for a 25 butterfly, a 20, 25, 30 butterfly. I really like the call. I think this is a great looking trade for October. It's probably going to stay in this range unless something crazy happens. We're going to stay in this range. This is going to be a nice sideways trade. There are lots and lots of bearish trades out there. Now here's the problem. We've fallen quite a bit. We've fallen quite a bit, so everything is pretty extended. When you look at charts, you can see that there's lots and lots of stuff that's weak. There's no question that's easy to find, but we need to find ones that have good timing here. So I came across this one, Beyond Meat. We had a big fall from 24 down to 15. That's a huge fall. That's like a 40, 45% fall. But here's what I like, this base. We've got 6 days now where the stock has not fallen. The rest of the market has been pretty weak, but this thing's just tired. But it's not really showing that it wants to go anywhere. I really like this one on a low base breakdown. I'm looking to potentially 10. 10 is a really good trade here. That's literally 35 to 40% away. I think there's a lot of money to be made on this one. You could play this one as conservative or aggressive as you want. You could do a 14-15 bear call spread and risk 50 cents to make 50 cents. That would be a very low risk trade. You could just go with the straight puts. I'm not loving straight puts here because volatility is very high, so you're going to be paying a lot more than you would have 2 to 3 months ago to buy put options. When volatility is high, we really like spreads more than just long calls and long puts. So Beyond Meat, to me, looks like it wants to break down and go even lower. And here is Zim Shipping. This is a shipping company. Take a look at all the shippers. They have turned over and died. They were super hot back in March, April, May, June. They were super hot. And then you know what? They've just turned over and died. So we have 4 days of a low base. Here we've got a breakdown. I like this one with a target of 20. Let's talk about tomorrow. The fact that the market can't bounce when the VIX is over 30 and can't put together at least a couple days of a bounce tells me we're likely low basing until we break down. So the question is, do we get that breakdown on a Friday? If you're saying, hey, I think we get a massive bounce on Friday, I think you're crazy. I think you're crazy. Unless some news comes out, markets don't bottom out on Fridays. I think we could potentially get a breakdown of the June lows and the lows that we've had all this week tomorrow. Or we could hold and get that breakdown next week. Remember, we are coming into the end of the seasonality week pattern. So if you are looking to get aggressively bearish, just have up in your mind, hey, you know what? The weakest 6 months of the year are September till October 15th. We might only have a week or two left of this very weak seasonal period. I think it's time to start winding up some of your bearish trades. You know, squeeze as much as you can out of your bearish trades. But I would not be looking to put on very bearish trades that are going to go into November and December. I think you want to wait for a good bounce before you enter into those trades. Tomorrow morning, we do get the PCE price index and personal income and spending. The PCE price index is the one the Fed likes to look at the most. If it's hot, watch out below. We're going to probably break down on Friday. If the number comes out to where it's okay, we might even get a little bit of a rally tomorrow, and we might even close the week flat. But we'll see what happens. We don't think we're going to have a massive rally off these bottoms until that VIX gets a little bit higher. Well, that is the Market Roundup. Thanks for joining me. Happy trading, everyone. Goodbye.